Hello again, fair binary options on the screen here, and we are continuing our binary options with moving averages. And so far on the first part we discussed how to apply a moving average on the screen, what are the properties and what to do with it. But I would like to go into more details here. So let's go on this right click, we go on the indicators list, and then we choose the moving average. We want to edit it, and let's make it of a different structure like this. Let's make it in blue, and the period, the most famous moving average is the 200 period. So if you click on the screen, this is the 200 period moving average. Now remember what we discussed on the first part. The bigger the period taken into account when you trade binary options with moving averages, the bigger the period the moving average takes into account, the stronger the support and resistance. Now this moving average, let's go at current prices. This moving average is acting as a support and resistance, and it is having current levels. I mean, take a look in here, price is 0.8787, and the moving average on the 200 candles, basically for the 200 hours, the previous 200 hours, is only here. So it is plotted all the time. Look how it acted at all these moves to the downside, how it acted as a resistance and support. So on the first move into the 200 moving average, we should look into to buy call options, and we have here on the hourly chart no less than 24 hours during which market only bounced from that moving average. So end of day expiration date, hourly expiration date, you name it, anything can be done. And then by the time the price is moving below the 200 moving average, then we should go and trade put options. And put options here, every time it goes into the moving average, right here it goes closely to it. And another way to trade the moving average, by the time you have multiple tests and retests, the investment should go smaller and smaller, because the risk is that in the end price will explode virtually higher after the moving average it is being overwhelmed, if you want. Now this is one interpretation with the MA200. The other interpretation is to plot on the screen multiple moving averages. For example, we take a new one, let's make it of a different color, let's make it in black, and we go with the 100 moving average, and it's going to be plotted on the screen. What are traders looking for? Because the lower, the smaller moving average, I mean the one that takes into account fewer candles, it is going to cross, or is going to move faster when compared with the bigger one. So the cross is being interpreted. By the time the cross comes, we are only interested in buying put options and not call options anymore. You want to buy put options with different investment types. For example, on the faster moving average on this one, we want to trade put options with a smaller investment, as by the time market comes into the MA200, we want to trade call options with a bigger investment. And then you look for the cross, when the two averages are going to cross. In this case, I mean the Euro-US dollar is really disrupted in here, but normally you just look at a normal cross like this one in here for call and put option. By the time the cross is happening, the bias is switching from long to short, or from short to long, or from call to put options, whatever you want to call it. So here it is still valid to buy call options, as well as it is here, until the cross comes. You may even go and put another moving average, the 51. Let's make it of a different color, let's make it in brown, and plot it on the screen. Now this is the 50 moving average, exactly the same. You are looking first of all for the perfect order. What's the perfect order? The perfect order is when the moving averages are aligned in order of their importance. The MA200, MA100, MA50 on a bearish trend, MA50, MA100, MA200 on a bullish trend, and you only want to trade call or put options by the time market comes into your support and resistance. So in here, as you can see, the 50 average already gave a signal here because it crossed above the 100. So this was a bullish signal, and you don't want to trade put options anymore, but you want to look for when market is going to confirm your scenario and when the 100 will cross then above the 200. Hope you understand that moving averages are really good for trend following. They represent a trend indicator, and they offer an important and great tool to find out perfect striking prices for your options. Thank you and have a great day. Bye bye.